market structure. Let's get into it. Basically, market structure is, it's pretty much in the name. It's the structure of the market in the direction that it's moving. So I like to tell people there's 3 kinds of structure that you can look for, right? There is the regular uptrending structure, like this. Then there is the downtrending structure, like this. And then there is a consolidation kind of structure where there's really no kind of, and I'll explain how that how to define each one. So on an uptrending structure, you'll be able to know that it's uptrending, obviously, because it's going up, but it is classified by higher highs and higher lows. And then conversely, on a downtrend structure, you'll have lower highs and lower lows. Okay. And then, of course, consolidation structure, you'll have neither higher highs or higher lows being consecutive, like this or like this. You'll have a high, you'll have a low, a lower high, a higher low, a higher high, a higher low, lower high, lower low. Basically, what today's structure was. So if we take a look at today's structure, there was really no key kind of direction. You've got the high to a low, a lower high. Oh, wait, what happened here? Nope, that's not the one. You've got the high to the lower high, lower low, lower high, higher low. It's just creating this kind of weird structure here. I'm just quickly doing it. Right? And then it comes out, takes out these highs, and then drops drastically, then pumps right back up. If you take that out and look at this structure here, oops, it's really confusing, right? This is not very clean cut structure. It doesn't look like the other ones that I showed you guys, which if you span out to even like the 15-minute time frame, you can't really see that either. Right? You've got the high, low, lower high, higher low, higher high, lower low, Unlike other days where we have pretty clean structure, like this, for example. Kind of consolidates for a bit here, but then continues to go on to make higher highs, higher lows, and it's just uptrending, right? You'll see that the trend is higher. Sven, the reason why it won't pull up the quarterly cycles is because you're not on the 1 minute. That only comes up on the 1 minute chart. Okay. So now, how do I use structure and understanding, what direction we are going in? I always start out on the 4-hour time frame, right? I like to look at what is the structure on the 4-hour time frame. If we are uptrending like this, let's say this is the 4-hour, okay? Let's mark that out like that. That's the 4-hour time frame. We are uptrending. And then we start to do a small turn like this. Let's say there is a point of interest here where you would expect it to reject, okay, on the 4-hour time frame. Although we are uptrending here, and the 4-hour being a higher time frame, it is starting to turn around in this instance, okay? And we start to get something like this. Now, you expect, let's say there is an imbalance here of some sort where you're expecting price to come into and tap into it, okay? Here you are expecting price to do this, right? You're anticipating a move back on up to come back up here. This is the 4-hour time frame. It looks really clean. We are uptrending. Now on the 15-minute time frame, we're going to take a look at this price leg right here. All right, on the 4-hour, it's just looking like a straight shot down to be able to just create a higher low. But on the 15-minute, it'll look like this. We will be downtrending on the 15-minute down into this point of interest here. Okay. And for the sake of this example, let's say that the 15-minute is doing this. It's putting in this lower high on the 15-minute. 4-hour is just retracing. The 15-minute looks bearish, right? Because we have bearish structure. And then here we end up putting a lower high. And then on the 15-minute, you're expecting price to reject off of this area to come down lower. Now let's move down into the 1-minute time frame. Okay. On this 15-minute price leg here, on the 1 minute, it's going to look like this potentially. A little bit of an uptrend. Okay. That's why sometimes when you're flipping through the different structure or this different time frames, it'll be confusing because you'll be like, wait, are we bullish? Are we bearish? Because I mean, we're uptrending here. The 15 minutes we're downtrending, but the 1 minute we're uptrending. You have to recognize where is price within the different time frame structures. We're just retracing on the 4 hour. The 15 minute obviously is going to look bearish. The 15 minute is now is a retracement of that bearish structure. So the 1 minute looks bullish. What are we going to expect on the 1 minute to wanna like we know that the 4 hour point of interest is down here. The 15 minute is potentially going to reject here. So how do we know that we're gonna come, like how do we know when the 1 minute will shift down into that? Well, here is that 15-minute point of interest, right? Where you expect price to reject off of. What you're gonna see is price do something like this. Okay? That right there is what is considered the light bulb moment on the 1 minute, because you have, where's the trend line? You have your higher lows, and then you have your higher highs, then we put in another higher low, but here is what I like to call a failure swing high. If it starts to turn around in this area right here, if price starts to do something like that, it starts to turn around before creating a new high after tapping into that 15-minute point of interest. That is the first clue to potentially the reversal of the 1 minute time frame to then align to the 15-minute continuation of that downtrend. Okay? So then here on the 1 minute, you'll get, let's delete this here. On the 1 minute, you'll get a break through that low and then a move on up like this to start creating bearish structure. Okay? Now this break of this lower or this higher low right here is what you may have heard as the term of a market structure shift. All right? Why is that called the market structure shift? Because the structure is uptrending, and then at this point, we shift. We shift from an uptrend structure to a downtrend structure on the 1 minute time frame, okay? Keep in mind that we are going down here on the 1 minute. It looks like it's reversing, right? You got to keep in mind that the 15 minute, it's just this. All right? Now the 15 minute is tapping into this 4 hour point of interest, because on the 4 hour time frame we are just this. All right, so here on the 1 minute, let's say that point of interest is down here. This is the 4 hour point of interest. Okay, all right, that's the 4 hour point of interest. What price could end up doing here in the 1 minute now is going to go up higher, tap into this. What happens to some traders when they see this? The ones who get FOMO are going to end up going short in this area. They're going to want to buy puts in this area because they're going to say, oh, because it'll look like this, for example. They'll be like, oh, we have a level of resistance here, or a level of support. It got broken, and now it came back, retested it, and now it's coming lower, so I'm going to go short. And you're looking at just a 1 minute time frame. Yeah, it could be SNT or just to break a structure. Dude's got info. Surprised you don't have a bigger following. Yeah, I mean, it's okay. It's okay if people don't want to follow me. Yeah, that last video was hilarious. Thank you. Yeah, I took some time to create that last video. Thought it was pretty interesting. Thought it was funny and appropriate for what I was trying to convey. But yeah, people are going to see this and they're going to be like, oh, look at this. This is a level of support. It got broke, retest that level right here. And now it's dropping. I'm going to go short. I'm going to buy puts. You'll have people who are, for example, Let me try to get that paintbrush. I've never used the paintbrush before. Where is it? Give me a second. As you can see, it's not one of my favorites. You've got people who are EMA traders, right? They've got something like this where the EMA is doing this. They've got like a 13 EMA like this. And then potentially you've got a, let's say a 14 EMA that is like this, where it did this. And then the 14 EMA or the 48 EMA finally does this, right? They get a crossover like that here. So now EMA traders are going to say, oh, we crossed, level of support broken, and then boom, it's a retest, I'm entering shorts. Or support and resistance traders could be say, oh yeah, this is a level of support, it broke, now it's turned into resistance. But if you don't have any kind of knowledge of market structure and where we are, because we know on the 4 hour we're dropping into a point of interest where we could bounce out of. All right, for support and resistance traders even, this is a higher time frame level of support. More important, EMA traders, there could still be a bullish EMA crossover, for example. If you don't have any kind of thought on what the higher time frame is doing and you're tunnel visioned on the 1 minute, you're gonna get lost and you're gonna lose. Okay, so it's important to always look at the higher time frame. So in this instance here, what price will end up doing is, let me go back to making this full screen there. Price will do this on the 1 minute, come back up like this. Actually, let's move this over a little bit. Okay. So that we can see that better. What price is going to end up doing is something like this. We move higher, and then we start to move like that. Okay? What we'll get is that light bulb moment. Why? Why is that light bulb moment? We've got lower lows, lower highs. We put in the last lower high, and then what do we end up putting? A higher low. Right here, you should start to be like, okay, why is it not creating a lower low? Well, on the 4 hour time frame, it dropped down into this point of interest where you're expecting price could come down and then start to move on up. Although on the 4 hour time frame it is just a very simple retracement, the 15 minute is bearish. The 1 minute looks like this. It's a drop to a rise to a drop down into that 4 hour time, into that 4 hour point of interest. And now on the 1 minute, once it starts to do this, okay, it starts to reverse here on the 1 minute on this 4 hour point of interest. It is now creating on the 15 minute time frame this, the same thing that happened on the 1 minute. Okay, so now this reversal here on the 1 minute is looking like this. Now you'll get traders who enter this, right? And they're like, okay, we're long. And then it'll start to do this. And then what will they do? What will they do once they start seeing this retracement like that? They'll get scared and they're going to sell it. Why? Because they're like, oh, no, this is not right. This is not right. This trade is wrong. It's coming back down. It's going to break that again. No, absolutely not. Keep in mind, here we're putting a lower high because on the 15 minute, it's still that lower high. Now when it starts to do this again here on the 1 minute, we start to get that little light bulb moment again. Okay. That's this leg down on the 15 minute to create that market structure shift here. Now the 1 minute is bullish once again. The 15 minute turned bullish and the 4 hour has remained bullish. And then on the 4 hour, it's just going to be this, a nice clean move on up. And your target is going to be the last recent high, the last recent swing high. So on the 1 minute, your entry will be somewhere here, right? Let's say this is your entry here. You put your stop below that swing low, and then you target that 4 hour high as your ultimate draw on liquidity. And that's how you end up getting trades that are very nice risk to rewards at 4.5. You get nice 1 to 2s. You get nice 1 to 3s in that sense. And that's exactly how I do it pretty much. That's exactly how I read market structure every single day. Every single day. It works time and time and time again. All right. The reason why I'm giving you guys this is because I feel like this is the biggest thing that any strategy needs. Market structure is always key. Okay. It is the foundation to any single strategy that you have. Support and resistance, EMA crossovers, order flow. Even if you have market structure paired with that, shoot, you're going to be doing golden. ICT concepts, it's a core foundation in it. All right. It is a core foundation. Understanding how the lower time frame market structure interacts with the 15-minute, interacts with the 4-hour. Okay. So I hope that made sense. I talked a lot. Let me know if you guys have questions. JC, you said I'm cooking right now, bro. Thank you.